Welcome to FT Markets. Ukraine is in the midst of a deep financial crisis as the country struggles with the ramifications of Crimea's annexation by Moscow and war with pro-Russian separatists in the east. Western backers have offered a rescue plan, but it depends on the agreement of Ukraine's creditors, one of whom happens to be Russia. With me to discuss this is Vadim Khramov, Ukraine chief economist at Bank of America Merrill Lynch. Vadim, thank you so much for joining us.
Thank you for having me.
So if we can put this crisis into context, first of all, Ukraine has been having problems for quite a while now, hasn't it? Where would you say this started?
If you go back a little bit in the history and think about the revolution that took place in the beginning of the last year, Ukraine has massive imbalances even before that. A large current account deficit, large fiscal deficit, and reserves going to $5 billion, basically saying. That's why the foreign package, the IMF package, was extremely necessary for the new government to move forward.
So if we can just go back a little bit, though, and say we have a new government that was set up quite recently. What happened to the old government?
Well, there was a revolution that was clearly changed. So the old government is not in place anymore. The new government is completely new people. Ukraine also has had parliamentary elections last year and presidential elections last year as well. So they have the new president, the new government, and the new parliament. Most of the parliament is new as well. And in our view, the change that took place in the government is really dramatical from what was a few years ago.
So you've got economic problems, you've got political upheaval, and now you've also got this debt crisis that's coming. If we look at the first chart, then we can see that the prices for Ukraine's debt have plummeted over the last year. Why is this? Why are investors so worried about Ukraine's debt?
Well, the major concern is clearly that Ukraine doesn't have cash to pay by itself. Ukraine's reserves were only $5 billion about a year ago when the IMF program started. The situation got much worse, and IMF about 6 months ago decided that debt restructuring is necessary. That's why bond prices went from basically 100 cents per dollar to 50 cents per dollar at the lowest levels of about 40 cents per dollar. So everyone knows that debt restructuring will take place. It's already officially announced. It was part of the IMF conditionality for Ukraine. The major question is that on which terms the bondholders can agree with the Ukrainian government to restructure its debt.
So at 40 cents a dollar, that's a clear crisis signal, and that means that investors don't think they're going to get back all of their money. Although we have seen the prices rise ever so slightly recently. Is that because a deal is in place?
I wouldn't say so. Clearly, we know that negotiations started recently, principal-to-principal negotiations between a committee of bondholders that has about 70% of Ukraine tradable bonds and the government and the IMF. They started last week. I think they will continue for a little bit before we know any news. So far, these signals were positive. At the same time, bond prices started going up for different various technical reasons primarily. Some people think bondholders can get a good deal because bondholders offer the cash relief so far. But the Ukrainian government is demanding relatively large face cuts.
So if we look at our second chart, then we can see what's happened to Ukraine's currency against the dollar. And it's the same story where we've had this dramatic crash in February, end of February, beginning of March, and then things have improved ever so slightly. But you would say that Ukraine is not out of the woods yet?
We don't think so. I would say currency devaluation is one of the major reasons for crises in many countries. Every time there is a major recession or military conflict, currency is the first line of defense that country has to let go instead of spending reserves. Ukraine's hryvnia lost about 75% of its value since the last year. And that was one of the major reasons why external debt, which is mainly denominated in US dollars, exploded massively from 40% of GDP in 2013 to about 100% of GDP currently. So currency crisis is one of the reasons for the debt crisis. Situation is normalizing now, mainly because Ukraine has relatively tight capital controls, which will be in place. If you loosen these capital controls right now, currency will experience additional pressures again.
So it's normalized because the government have put in place emergency measures because there is a crisis. It's not because things are looking better at the moment.
It is still a major recession. So economists expect from -8 to -10% GDP recession this year. IMF is supporting capital controls. IMF is providing financing to the government as well to buy, for example, gas from Europe and from Russia and to provide basic necessary needs. At the same time, crisis is not over. Ukraine is in the middle of the economic crisis and also in the middle of the debt crisis because negotiations are ongoing.
Vadim Khramov, thank you so much. So while all the headlines are still on Greece, Europe's other debt crisis is still ongoing.